So I want to start by talking about what's happening on Wall Street right now, because as we know, first it was SPACs, then it was tech, and now it looks like everything. Target, Walmart, all really suffering, from the fate of inflation here. Is anything safe, Kevin, right now?
No, we're having a garden variety correction. Valuations got stretched. There was tremendous liquidity in the market. You got to remember, prior to the pandemic PPP programs and all the support in printing $4.5 trillion, this was standard volatility. It wasn't uncommon to have the VIX past 30. And we forgot about it. You know, a whole generation of investors forgot or never learned what volatility was. Well, welcome to volatility. And now it's affecting many different sectors with the exception of energy for obvious reasons. But each sector seems to get maligned every second week. And so the whole market's PE is being taken down with the uncertainty around inflation, Ukrainian war. And this has been talked about for weeks now, but there's no safety in saying I'm going to go hide in Walmart, for example. You just lost 20% there. That's because the market's trying to figure out what comes next.
And what does come next, Kevin? Because I'm sure you get stopped all the time. I do as well by worried investors saying, I've just lost millions. How do we know if the bottom is near? Have we bottomed now?
No, generally a bottom, and I've seen this movie so many times before, is you need a big institution to go bankrupt. That always helps. I mean, you have to sacrifice an institution to get this to work, because then you get a dramatic flushing of equity positions as panic sets in. Margin calls are called in, shorts, are bought. They basically bought themselves in already, and then you get this big leg down. Usually it's 5 to 10%, and that is the bottoming process we need. Now, this time I was thinking it might be in the crypto space, but that's already been decimated, and so it may be something else, a financial services company, or there was some rumors about Coinbase that turned out not to be true, but you need somebody's offside somewhere on a leveraged hedge position. You just don't know who it is yet, and they're big. And we're going to wake up in the next 10 days, 20 days, and you're going to find out they're a zero. That's a good thing, and I'm waiting for that to happen because we're getting close to a bottom here.
Okay, so when that happens, any feeling as to what company it could be, Kevin? What sector?
No, it's hard to say. It's generally, it usually happens in financial services where somebody was trying some strategy, a leverage strategy. It's always leverage that does this, or a hedge fund. Hedge funds, a good hedge fund that loses 10 or 20 billion, that's also good for flushing, and that's happened many times before. These are guys that have never seen this kind of a market. So they set up a position that went awry, couldn't unwind their leverage, and they just get wiped out. And again, I feel sorry for them, but I think it's very healthy when that happens. And the trouble with this correction is it's a slow grind down 1 to 3% a day. And you don't really bottom till you get that flush.
And if history is any indication, we tend to always have a robuster market around the time of the midterm election. So that would kind of time in perfectly.
Yeah, every time's different, but this election is going to be really interesting because if the polls are any indication, wow, we're going to get a shift in both, the Hill is going to completely shift. And so you would think there'd be some policy moves now by Biden to try and offset the slaughterfest he faces.
Let's talk about inflation now, because everyone's coming out, Bernanke, Bezos. So let's start with Bernanke, former Fed chair, coming out earlier this week. He has a new book coming out also, by the way, saying that, hey, the Fed really made a mistake here. They were late to respond to inflation. Thoughts on Bernanke's comments? Are you surprised he came out with such a statement?
Yeah, a little bit. It's kind of a rear view mirror statement. But remember, you only have to go back to 2020, 2021, when the height of the pandemic was ripping through the economy and people had tremendous fear. And not only was the Fed, trying to be very accommodative, but we were also printing $4.5 trillion. And so it's not a big surprise that you would have inflation now. That's what happens when you run the printing presses. It's unprecedented to print that much money ever in the history of our economy. And so having some inflation. Now, the big question now is what portion of it is transitory? Let's take a hint from what happened with Target and Walmart. Half of their problems were supply chain issues, the wrong mix of product, and increased costs of transportation. So it wasn't that the consumer rolled over and didn't want to buy anything. That wasn't the issue. The issue was they really had increased costs. In the case of Target, an extra $1 billion+ in just transportation. And so that really is something that's transitory. That's not going to be around forever. And so you have to kind of put that into the cake when you're talking about 6 to 8% inflation. Maybe 4 to 5% of that is real, and the rest of it is short term. And the market's kind of waiting to see which quarter we start to see that wane a bit, maybe come down to 7-6%.
Right. And what are your, there's two sides here, folks who think that the Fed will continue hiking until they get to that comfortable level of inflation, and others saying there's just going to be one more rate hike in June and that's it, and they're going to have to reverse course. What's Kevin's take?
Yeah, I mean, if you're a real pessimist, it's one more 50 bip hike and then you have to reverse course and take it back 90 days later. I don't think that's going to happen. The reason I say that is if you look at employment, we're at full employment right now. It's really hard to forecast a recession at full employment. And so we're in a really interesting situation here. It's, for the real pessimists about the economy, they're saying, well, the consumer spent, they're about to roll over. But everybody I talk to that's selling to consumer, including the Target and the Walmart numbers, show that the consumer is still flush with cash. It takes a long time to spend $4.5 trillion. And so each recession is different. And this is a predictive correction in the market. We haven't actually had the bad news yet. We're just predicting it. So we're pulling down valuations and really rapidly across all sectors. There's nowhere really to be safe right now with the exception of energy, because energy prices continue to spike and the cash flows of oil companies that have fallen out of favor, and even the president didn't like pipelines, et cetera. Well, that turned out to have been a mistake. And now we have these exceptionally high $4.5 to $6 gallon prices, and consumers are not happy.